Good morning and welcome aboard. Quick sound check for everybody. AAG, welcome. Good morning. Darren, welcome. Good morning. Peter W, welcome back. Peter, I saw that you slipped in at the end of the session yesterday. Welcome aboard. Give me a quick sound check. Let me know that you are able to hear me. For those that are joining us through our socials, you can pop in at DayTradingMarkets.org. DayTradingMarkets.org. That is our home base via Zoom. We're here trading days. This is a group coaching session for new and experienced traders. New traders, we help you get set up to become an experienced trader. Experienced traders, we help you trade better based on this group coaching session. We utilize a price action trading strategy. It is teachable by us, learnable by you. We start the morning session by laying out key levels in the S&P 500 E-mini. We work the morning session until 11. After 11, we do our open mic. So if you have any questions and you have a headset and a microphone, feel free to ask. If you need to get set up, you need a trading platform, ask. If you are looking to earn a funded trading account, ask. Getting set up is the right thing to do to get started in this endeavor. Then it's a matter of learning how to scalp the market and trade it and look to develop consistent profitability, and that's what we look to help you with. Hey, Anupam, good morning. Hey, Anupam, did you re-register with your Gmail or was it still the Yahoo?
Good morning, Mr. Brad. How are you this morning?
Mr. Don, how are you, buddy?
I'm doing all right. I'm running behind this morning. Give me a second or two to get caught up.
Not a worry.
All right.
Hey, AG, quick sound check for you. Darren, sound check for you. Pete, sound check for you. Just open up your chat feature. Keep it open. Should see a separate window where you can see this. And shortly we'll have up our charts. Hey, Pete, welcome aboard. AG, Duran. Oh, Duran, you raised your hand. Thank you. For those that are joining us through some of our socials, welcome. Join us at our home base if you so choose. If you have it, put up an S&P 500 E-mini chart. If you need it, let us know in Zoom by joining us in Zoom Live. If you need charts, let us know. In other words, if you need a trading platform, we have an affiliate that we work with that can set you up. If you're looking to trade or earn a funded trading account, we have links for that also, where you can set yourself up to look to earn a funded trading account through one of our relationships. Pretty straightforward stuff. We talked yesterday about getting set up as an entrepreneur, getting set up to trade as an opportunity for yourself, and we can help you do that. We are in the helping traders out business. We're an educational service called a group trade along. Your host is a 25-year veteran trader of the trading pits in Chicago. He is actively scalping for his own trading account. And he is here during the day, not only doing that, but he is working and helping traders that are new or experienced to develop what we call consistent profitability. Hey, Craig, good morning. Hey, Mike. Hey, Gooey. Hopefully I'm pronouncing that correctly. Apologies if I'm not. Give us a quick shout out. Make sure you have your chat feature open. Check out the window that's being distributed in Zoom. It has charts. I see you raised your hand. Thank you. That's good. Iran, you had raised your hand earlier. Thank you. Hey, Paul G, let us know. Also let us know for your own sake where you are on the trading curve, new or experienced. Use the chat feature to communicate. At the end of the morning session at 11 Eastern time, during this session, we work the market based on price action trading levels, our coaching levels, price action trading methodology. We work the market between now and 11 a.m., looking to do 2, 3, 4, 5 trades. We're looking to pick up 2 points plus on each trade. There is a trading methodology here that you can learn. So we're going to start out this morning session. We're going to give you out a series of levels, coaching levels. These are the areas that we've identified or will be identifying. What time is it now? It is 9:23 a.m. It is April 23rd, 2024. Everything you do is for educational purposes only. Nothing to be taken as direct trading or investment advice. This is an educational only service focused on those individuals out there that are looking to or are set up as an entrepreneur in trading and trying to do better in their trading. For those that are new to trading, we help you get set up. So as we come into the open here, the cash market is opening up at 9:30. It's 9:23. Trade Alone Coach is going to his screens and setting this morning's levels pretty close and tight to the cash open, so they're more valid for the session because they were posted, derived at this moment in time as we are going into the morning session, the opening bell. The opening bell is when the cash market opens in New York. A lot of money rushes into the market and it creates movement, volatility, opportunity for us to put trades on and take them off based on that momentum, follow through, and volatility, the extra momentum, follow through, and volatility that happens through the cash open. And then we look to wind down at 11 a.m. We're looking to do 2, 3, 4, 5 trades within this window. We're looking to pick up 2 points plus on each trade. We defend generally at 2 points, but it depends on the action of price, momentum, and follow through after the opening bell, where we rejigger the our stop placement, our work and stop placement. Being a trader means, and this is what we teach, right? We teach price action trading to you. It is teachable and learnable by you. It is practicable by you based on having a practice account, which is your regular trading account set to simulation trading so that you can learn this poem before you expose yourself to risk and expose your risk capital. If you are looking to earn a funded trading account, you would be set up in that endeavor. You would have your own trading platform. You would practice trade, and practice trade. And you would look to develop consistent profitability. And then you would spin out into trading at risk. And the concept here is that if you're good at trading, then somebody would lend you their money to trade as the talent, your school disciplined talent based on price action trading that we help you master. For those that are at risk with their own capital, same thing. You would have a trading platform through a broker. You would execute those trades in simulation only until you get good enough to go out into real time, and we help you make that transition. So be prepared to write the levels down. Be prepared to write the levels down when they're given out. These are today's coaching levels. Now, let's think about that for a second. Saul is an active trader. He's a 25-year veteran of the trading pits in Chicago. He is coming to his screens today as a serious participant in the market. He is setting levels to give him an advantage over other traders. He sets a pivot and other levels on top and bottom of that pivot based on how he sets his levels. Now think about that for a second. How he sets his levels for his advantage over other traders today. And he's going to share those levels with everybody, and they're going to become our coaching levels. Now, the concept here is having better levels, quite frankly, could equal better trades. These are different levels, most cases, than the levels that get spit out or spoon-fed by trading platforms or software. And if you're new to trading, you'll pick up on that pretty quick when you get involved. If you're an experienced trader, you know what I'm talking about. The idea is, how do you come to your screens today, set yourself up for the day with a trading advantage, which is, in this case, quite possibly Saul's levels, and I'll let you determine that. And then it is, what do you do with the levels? With the E-mini, you can make money on the upside, make money on the downside. If you look at the charts, you can see that they go up, that the market goes up and down vis-a-vis the derivative price in the S&P 500 E-mini. That equals a price. When the market goes up, the price goes up, and you can buy it and sell it off. The market is going down, you can sell it short, buy it back, and make the difference. That is a very, the S&P 500 E-mini for us is a highly liquid instrument that we can make money on the top and the bottom. We choose it because it's highly liquid. We can make money when the market goes up and it goes down. You can activate your account with a mouse, keyboard, and screen in a trading platform. So it's very easy to get set up and get rolling. The art form and the money-making form is what we help you with. We can help you with the setup. We can help you get going. We can set you up as an entrepreneur. You just have to ask. Then we can help and work with you. Join us in Zoom Live. Take a moment now. Join us in Zoom Live by going to DayTradingMarkets.org, DayTradingMarkets.org, and join us live in Zoom, our home base. Like us, share us, love us, thumbs up us. Take a moment to do that now in your socials so that we can get the word out about this service, and we appreciate you doing that. Use DayTradingMarkets.org as the URL. Saul's going to step in and take over the mic. We're going to go through the morning session together at 11. If you want to come in, open mic time, we'll answer your questions, and we'll go from there. Thank you.
Good morning. Good morning, everybody. Can everybody hear me all right? Let's give you our levels for this morning. Our pivot this morning is 50.69, 50.69. Support down below at 59, 50, 39, 31, 24. Upside at 77, 87, 96, 51.07, and 14. Pivot 69, resistance at 77, 87, 96, 51.07, and then 14, support below 59, 50, 39, 31, and 24. All right. Welcome some of the new folks that are here. We're trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action trades might occur. Combination of both of those gives us our setups for this morning. We're looking to scalp the markets. We're trying to get about 2 to 3 points on our trades. Depending on volatility, obviously, that could change. But for the time being, I think 2 to 3 points would be minimum. And we're looking to take advantage of those ebbs and flows when the market present themselves. All right, so we're scalping the market. We don't believe markets go straight up or straight down. We're looking for those inflection points to create opportunities for us. The levels we gave out are those part of those inflection points, in addition to any price action trades that might occur. And the combination of both the price action trades and the levels gives us our opportunities to trade, our setups, and those are going to be a guide through the day, those levels. And we'll repeat the levels in the chat here in a little bit, as I'll repeat them again for us. Our pivot this morning is 69, 50, 69. Support below at 59, 50, 39, 31, 24. Upside at 77, 87, 96, 51, 07, and then 14. All right. So we're all we're trying to do here is find areas of inflection and create opportunity for us to scalp. Levels, I said, are one aspect, and then we have price action trades. We average about 4 to 5 trades a day, and we also focus on the morning hours to give us those opportunities. If you look at the chat window, you'll see the levels there for us. Thanks there, Don. All right. Let's see here if we have any other numbers coming out this morning. Like I said, Friday's number is going to be a big number, PCE number, which is what the Fed looks at for inflation guidance, I guess. We do have a couple numbers coming out this morning. We have PMI composite at 8:45, so in about 11 minutes or so. And got a number coming out here. And then at the top of the hour, we have new home sales and Richmond Fed. Both of those could move the market. We don't like to have any positions out when numbers are released, fundamentals. So we try to stay flat when those are out there, and we'll see what they bring, if they can bring any opportunity here for us or not. You can see here over the last couple hours, the market's been kind of steady, not really doing much. So we'll see what the day brings. You have to be patient here in trading. You have to wait for the market to set an opportunity up for you. Very important to let the market create the setup instead of you thinking that you know which way the market's going, because I hate to say this, but most of the time we don't know what the market's going to be doing. Sometimes we can guess, right? But we're not here to try to guess. We're just here to try to take advantage of opportunities that it might develop for us or not. Again, if anybody has any questions throughout the course of the morning, please feel free to ask in the chat. We don't mind questions about anything we do, about the levels we give out, about any price action trades that we might have. All of those are questions, valid questions, and definitely ask if you have any. And we encourage you to ask questions. The only way. Okay. All right, so you can see here we're kind of drifting in a little bit of a range. We do have a number coming out here at 8:45. We don't know if it's going to be a market mover or not, but could create some opportunity. So we drifted down here. We've got a little support here at the 59 area. You can see our blue bands coming in there at 62. We feel a little aggressive. Very thin there overnight there, at least for the last couple of hours. So nothing to get too excited about overnight stuff. And we'll see if these numbers create some opportunity for us. All right. Again, very important to be a little bit patient here and wait for the market to develop those opportunities or create opportunities. We're at the mercy of volatility. We don't create it, we just trade it. And sometimes we have a lot of volatility and more opportunity. We average about 4 to 5 trades a day. So that's what our average is. And sometimes we get a little bit more, sometimes we get a little bit less, and most of it is dependent on each individual's risk tolerance. Let's point that out. Everybody here has different risk tolerances, and so those the number of trades that anybody would put on is dependent on each individual's risk tolerance. A trade that I might take might be not suitable for somebody else, and so you have to understand your risk tolerance and then trade that accordingly. A recognition of the trade is one aspect, and then the execution of the trade is the second aspect. And both of those have their own set of dynamics that have to be considered, especially with each individual's risk tolerance. All right, we're just kind of range bound here a little bit. We're just kind of hanging around our pivot area, so very not much going on. Maybe the market is just waiting for these numbers to be released, and we'll see where they go from there. If you've joined us a little bit late here, we're going to repeat the levels in the chat for you. Those are our guide for the day. We gave you those numbers out when the market opened up, and we kind of used those to guide us through the day as to where we're going to find areas of inflection that might create opportunities for us to scalp. We'll repeat the levels there in the chat in a little bit. All right, market is just kind of hanging around our pivot here at 69, so very, very quiet, uneventful so far. We'll see if these numbers that are released create some opportunity. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. We're just kind of hanging around our pivot area here. Patience is important. We do have a number be released here in about 5 minutes. We'll see what that brings to the table. PMI composite will be released here at 8:45. Then we have a couple other numbers: no home sales and Richmond Fed released at the top of the hour. The pivot is the area that we believe it's like what I like to call a pit pivot. I used to trade on the floor for a long time, and we created our own dynamic here for giving us a little pivot for the day. And each day obviously has its own set of dynamics. So it's something that there's no equation to it. Most of the stuff that we do here is taken right from charts that we offer, real-time charts, and we don't use any indexes or anything like that to help us, or we just kind of take what the market is telling us in front. That's why we always are waiting for opportunities that the market can create for us versus just jumping in, because we try not to have opinions either. But pivot is something that we've used from the floor, and then we've transformed it here to trading on the electronically, or trading off the floor, or trading on a computer, or whatever you want to call this. since there's no floor anymore, at least for futures, minis. There's floor, but not for equities. All right, we're just kind of hanging around this pivot area here. It's kind of doing nothing, both sides of it. So let's be patient with it. A number coming out here in a couple minutes here, 3 minutes or so. See what that brings to the table. We have a resistance up at the 77 area. The support down at the 59 area. Here we do have a couple more numbers at the top of the hour, in addition to excuse me, a 2-year note auction at noon Chicago time. Now, it could move the market or not, but usually affects interest rates more than they affect equities. As we're kind of pushing up here a little bit to these new highs, interim highs. Got a little resistance up here at the 77 area, but remember we do have a number. So depending on your risk tolerance, how much you close to the number you're willing to trade. Everybody here has different ways of managing that. You have to find the opportunity here that makes you comfortable trading when a number is coming out here in a couple minutes. So sometimes when we're close to a level or close to an opportunity and there's a number that's imminent, depending on your risk tolerance, maybe it's a good thing not to get involved. And at least you have to, at least you know we are aware of the situation, and you have to then manage that risk according to your risk tolerance. All right, we're kind of got up here to 75 and a quarter against our 77. We do have a number coming out here in about a minute and a half or so. So kind of close to 77, close to when the numbers release. So be careful. And different ways of managing risk. If you're trading multiple contracts, you could, trade it smaller. You could maybe cut down the size. If you're trading, let's say, 4 lots, maybe you can go to trade 1. If you want to trade the level, if you want to take it off completely, you can take it off completely. But you have to understand that the number is out, and you have to take that into consideration as we rotated up here to 75 and a quarter against our 77. So again, I like to scale in around my levels, so I'm scaling in a point above and below. Obviously, I did not get filled up here in this first rotation to it, and now the number is going to be out here in less than a minute. So you can tell that there's a number going to be released. You can see the ladder ticket here is very thinned out. There's no 100 lots up and down the ladder ticket. It's like 20s, 30s. So there's, something's imminent when they clear the deck, so to speak. So you have to be a little bit careful here. Downside support is down at really the 59 area. If you're going to leave anything in, and be careful there at 77, only because we kind of tested it but didn't. All right, you can see here how there's a 20 now, 20 lots up and down, 10 lots up and down the ladder tick. Whoa, there's a little flash up there for you. Made a new tick made a new high by a tick. How do you like that? All right, a little bit bullish there on this number. Okay. Again, if you're going to leave it, trade it a little bit smaller. Understand that there's risk here when there's a number, and this is what we're talking about. You can see the volatility here increases, so it's hard for us to manage a trade when the computer programs take over. Right? And this is what's going on right now. So upside resistance is up at 87. That one I would still leave in there. Well, I'm leaving in there. If you don't like the volatility, you don't have to trade it. You can wait till things slow down a little bit, which is always an option. And the reason we don't like to trade when numbers are released for this exact reason, we cannot compete with the volatility of computers, with the movement, how fast they move, and so consequently we kind of let the numbers released, and then get involved after when things settle down here a little bit. All right. Well, we kind of ran through again, not unexpected. They kind of ran through to 77. So we said, to not. Oh, look at the bond market really liking this. Wow, it's interesting. They're really liking that little number there. PMI composite. They were expecting 52, came out at 49.9. So bad numbers are good for the market, right? And that kind of is would hope that the Fed would look favorably in lowering interest rates. And that's why you have this reaction there where bad numbers are good to the market. So again, be a little bit careful here. We did talk about kind of running through the 77 because we just missed it up there initially, and so we definitely was way too close for us to have it in there, and so now we came up with our next level up here is 87. Of course, we get up here to 4.5, 84.5, and then turn off here a little bit. Right now, got a little support around the pivot area at 69. With a little resistance here at the 87. Again, if you don't like to trade numbers, this is one good reason why you shouldn't trade numbers, because the volatility does get pumped up really quickly. And again, it's very hard for us to compete with the algorithms that are out there, computerized trading algorithms that definitely move faster than we could move. So we try to preserve capital here and not trade when numbers are released. And just be patient and wait, because if there is a crazy number and if it's out of whack like this one is, we're going to get opportunities. It's just a matter of being patient and waiting for the market to give us that opportunity. So we've got a little resistance up here at 87. See what happens if that gets up here or not. And whatever the case may be, whatever situation you have, you always keep your stops in place. And sometimes we're going to have one of those days where we just miss our entry points by just that much, and then we have to adjust based on the price action, like we adjusted there at 77. We didn't we got up there to 75 and change, and then before the number, I suggested, well, probably not to use the 77 anymore because this number is going to be released and it's a little bit too close. And again, but I did explain that if you wanted to trade it, you have different risk tolerances here, and maybe manage that risk accordingly, like trade it a little bit smaller. So everybody here has different risk tolerances. You have to be comfortable with how you choose to trade and then do it consistently. All right. A little support right now back at the 69 area. Upside resistance is up there, still at 87. Got up here to 4 and change, and then came off 84 and change. Came off here a little bit, and kind of in the middle here. You'd be guessing as to which way this thing's going to go. So we don't like to guess here. So we'll just be a little bit patient. Again, if anybody has any questions, feel free to ask in the chat. All right, we're kind of drifting back down. Again, a little support down at the pivot area there at 69 if you're a little aggressive. If anybody has any questions, feel free to ask in the chat. Again, like I said, the market could have gone either way up there, so I didn't know it was going to come back down or go make new highs. So we have to be a little bit patient and wait for a trade to kind of develop. And you'd be guessing if you told me, well, I knew the market was going to come back down. Well, if I knew, you know what they say? They always say that if I just had tomorrow's paper today one time, actually you don't need a paper anymore. You just need tomorrow's website bullet points one time. All right, you can predict the future one time. That's all you need. You can retire. Well, maybe not retire. Maybe just retire for a year or so. Anyway, wishful thinking. Now, again, if anybody has any questions, definitely feel free to ask in the chat. We are trying to take advantage of ebbs and flows of the market. We have areas that we're focused in on. Take our areas of where we feel that we are going to focus in on. And right now, our area on the upside is up at the 87 area, and market got up to 84 and change there. And like I said earlier, might be one of those days where we miss our entry points by just that much, and we have to make adjustments, like we did with the 77. Right? It's just not going to be perfect here. Again, we will repeat the levels in the chat for you. Those are the levels that we gave out this morning to kind of guide us through the day in case you missed them. We are scalping mini S&Ps or looking for opportunities to scalp the market based on those levels we gave out, any price action trades occurring as well. And we do have to deal with a couple numbers here at the at the top of the hour. New home sales and Richmond Fed. All right, we're coming back up here, retesting these highs here maybe. Got a little resistance around the 87 area. Let's see, new home sales and Richmond Fed index. Both of those going to be released here at 9 o'clock. A little resistance up at 87. Next support level will be down at the 69 area. All right, market uptick in here a touch. Looking at the 87 area is a little area that we focused in on. Going up here quickly to the 87 area. Again, whatever we do, we're always keeping our stops in place. We're not going to love any trade we put on. All right, coming up here, we're going to test this 87 area here a touch. See what it wants to do for us. We do have a number coming out here in about 3 minutes. So keep that in mind if you are trading. Again, if you don't like to have any position on, the market is giving you a chance here to kind of get out of here. Some of these nice little rotation there. If you got into the top end there at 88, I mean, take some profits off, peel some profits off, especially since we are. And then now we're coming here, giving us our 2 points plus here. If you got filled on the 88, you're getting a nice little rotation here. Very nice, getting us 3 points against the 87. All right, nice little rotation there against our top side, our second resistance area there at 87. You got up to 88 and 75, so you got filled on the top end there at 88 as well. And we're getting a nice little rotation here against that level. And if you have any extras, this is how you can take more than 2 or 3 points out of a trade. Obviously, we've gotten 3, 4 points plus. You see bonds are here making new highs. So again, we seem to be following the bonds. Take some profits here, and then it'll be a nice little trade, especially since we have a number coming out here in about 2 minutes. So nice little trade there against our 87 area. Just took a little bit of heat there, but they also were able to get filled up on the top end there at 88. If you had a 2 point stop, you didn't get filled because it got up to 88.75. So I like to go to about a 3 point stop on my stuff here, but that's fine. If you got a 2 point stop, 2 point stop, you didn't get filled, and then you got a nice rotation. Now, if you want to have a runner, you could do that as well. And see here if you want to hold one contract. Now, if you're going to hold it through the number here, be a little bit careful, because no matter what, though, sometimes when numbers are released and they thin out the ladder ticket, even though you have a stop in, let's say at 80, 85, it could not get filled till 87, 88. There's no, especially if you go to the market with the stops. So that's why it's also good to not to have any positions on when numbers are released. You don't have to deal with the extra volatility, especially because, like I said, the computer generated moves are much quicker than we can move ourselves. So we like to be flat here, and the number is going to be released here in about a minute or so. And if you want to have a runner, you could do that. But like I said, be careful about your stop. A runner meaning if you have any contracts left over and sold our 87 area, see if we can't push it a little bit lower. But you got 5 points here on the trade. It's a nice little opportunity. And especially with the number, you can lose those 5 points like in a flash, as you saw when that first 845 number came out. All right, so nice little opportunity there against our 87 area. Again, we had to wait a little bit of time here. We had to kind of manage the 77 area, like I said earlier, especially with on the heels that the number was going to be released. Oops. All right, number is out right now. Again, not really having that same effect. The home sales increased a little bit. That's interesting. All right, again, this time around, they didn't lessen the ladder ticket that much, when the ladder ticket was released. It is a little bit bearish on this number. I'm surprised that we held up so much. 693 versus what expected at 668. Again, should be a good number, but a good number is bad. just like we had a bad number being good, right? It's all messed up these days. Everything's messed up. Backwards. Everything's backwards. All right, but we obviously did not have the same reaction as we did with the first number. But again, if you are, well, we were flat now because, like I said, I don't like to have positions on when numbers are released. So I'm flat, and next level on the upside I'm focused in on is going to be the 96 area. Downside support is still down at 69. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. Right, we're just kind of hanging up here on these interim highs. Support down at 69. We had a nice little rotation there against our 87 area. We're going to repeat the levels in the chat here in a second. In case you missed them, those are the levels that we gave out earlier this morning. And again, we use them as a guide to the day. And we could tweak those a little bit like we did there with the 77 area because of the timing and everything. And then we can adjust those again based on price action. So these things do come into play, and you have to consider just because we give you levels doesn't mean that you blindly put them in, not think about what's going on at the moment in time. All right, now we're rotating back down here a touch. We still have support down at the 69 area. I don't know if we're going to get there or not, but anywhere between, I mean, you could be, you can have some interim support at 74, but a little bit more, quote unquote, safer would be 69. But again, that's everybody's risk tolerance here is different. Anything I say as far as price action trades or levels or commentary here is definitely a taught experience. We are always trying to find reasons to get into trades, and we do offer a education course to help those of you who want to do this independently of myself, find areas on your own, understand when to use them, when not to use them, when to tweak them, when not to tweak them, understand why we're doing all of that. And the most important thing here is why we do things. We try to explain that in our education course more than anything else. All right, we're just kind of hanging up here on these highs. So that's what we're looking at here. All right, we're pushing these highs here a touch. Next resistance there is up at the 96 area. All right, I'll repeat the levels here. Those are the levels we gave out this morning. We kind of use them as a guide to the day. Our pivot this morning was 50.69, 50.69. Upside resistance was at 77, then 87, 96, and then 51.07, and then 14. And down below we have support at 59, 50, 39, 31, and 24. Well, first of all, the bigger S&P contract is harder to trade. The bigger contract, the E-mini, E-minis are very liquid, and you get, well, we trade the E-mini is liquid and it has good volatility and good movement. It trades well technically, and I mean, you could probably take the same levels and use them in the bigger contract. It's a smaller contract to trade than the SPY, and this is much easier to get to, and just liquidity is here. I mean, I don't trade the Nasdaq, I don't trade the Dow, but this is where Dow also has some good liquidity. But but we trade off of the minis because it also has good liquidity and trades well technically. Oops. But you could probably take the same levels and kind of correlate them there to the SPY as well. All right, we're coming back up here to these interim highs. Our next level of resistance on the upside is up at 96. We're trying to take advantage of ebbs and flows of the market, trying to scalp the market. We have support and resistance areas that we just talked about to give us those opportunities, those inflection points that we believe will give us an opportunity to scalp these markets, and markets will move off of them. Obviously, not all of them work all the time, and that's why we keep our stops in place. And like we showed here with the 87 area, it's also a way to sometimes take a little bit more than 2 or 3 points out of your trades by holding, depending if you're trading multiple contracts, that is, to hold a 1 or 2 or 1, to be able to take a little bit more when the market kind of goes your way and rotates off of an area for you. Okay, we went and retested the high there. Nice little double top there. And then came off of it very quickly. All right, there, Philip. You have a good day. Always good to know that Made your money and run. Like to hear that. Nothing wrong with that at all, actually. Again, we focus on morning hours to give us our opportunities. We feel the dynamics work best for us during the morning hours versus kind of hanging here all day. The dynamics change as the day goes on. The volatility changes. The number of players change. So all of those dynamics come into play here, and that's why we kind of focus on the morning hours. We feel it gives us good bang for our money, and also you have to remember that our levels do work all day. So the levels that we gave out this morning do work all day. So in case, even though we're not, price action trades are a little bit different there as the day goes on. There are the levels again in the chat for you in case you missed them. The opportunities do change as the day goes on, and but um, the levels will work all day. The price action trades do change as the day goes on because the number of traders in the or trading kind of changes as the day goes on, especially if it gets a little bit slow there in the afternoon. So volume goes down, volatility goes down, and sometimes you don't get those same reactions to the price action trades you would in the morning. We're kind of just hanging here against these highs. I think if we get above the 90 area, we might make a push up to 96. And come back up here to these again. We have to get above 90 to make a push up to the 96 area. A little support would be right now around the 74, 75 area. We're just kind of hanging here on these highs. Made a new high by a tick up there. And came off that a little bit. Still looking at the next level up at 96. So support would be, like I said, right now at 74, 75. Again, if anybody has any questions, feel free to ask in the chat. All right, we're just kind of hanging out on these highs. We got to get above the 90 there to get maybe a little push higher. We got up there to 89 even, and then kind of drifted back down. Again, you could have used that as an exit strategy if you were a little bit aggressive there. So then I want to get to 90 and above, and we could push up higher. So if you're trying to scalp it and you had a 90 as an exit strategy, because we think that the market will pop up if we get above 90, you can use that as a stop for any short below that. And you could still done the same thing here. Got up to 87 there. You could have used like an exit strategy above 90. Again, those are just different ideas, different concepts that you could use if you are trading, finding an exit strategy and then finding your entry point. All right, now we're coming back up here to these highs. We'll get above 90. We'll have maybe a push maybe up to the 96 area, which is our next level of resistance. Well, I mean, they scored 8 points, and yeah, that was pretty amazing. They scored 8 points in 27 seconds again to beat them. But I mean, if you watch a sequence, especially that last sequence there, I mean, where are the refs? Let's not get carried away here. Refs were, they're grabbing people, pushing people, refs not making no call. I mean, come on. It's yeah, there's reasons. There are rules, for that, for to make sure that. Look, I'm not even a Knicks fan. I thought it was a great game, but it's still you got rules here to follow. I mean, they're grabbing people, pushing them down. The coach calling a timeout, ignored. I mean, you know. All right, we got a little bit of a push here. Maybe trying. We're trying to keep you a little bit longer. If you are long, it's going to take some profits along the way as well. Even though we're going to be targeting the 96 area, but if you did manage to jump in here, get long, you are still going to take some profits along the way. Just because we think the market's going to go there doesn't mean it will go there. And we're getting above 90. We're thinking maybe we make a run up here to 96. And you're always going to keep your stops in place. And again, sometimes the bears not they win. Not going to let that thing happen. We'll see. But it got up to 91 and a half there, traded. Again, like I said, you're still going to take a little bit of profit here if you got up there. That way you minimize your risk a little bit, especially since it's stalled up there. But it doesn't seem like it wanted to, at least not this time around. We'll see. Kind of hanging in there. Again, also the market's also giving you a chance here to scratch the trade if you don't like the price action. You thought maybe it would work a little bit faster. It's not working as fast as you thought. These are all options that you have. I'm looking at the 96 as our next level of resistance and kind of just waiting for that. Again, we thought that we would get a little bit of a push up here above 90, but those bears are just too strong. Coming back down, we still support right now at the 74, 75 area. That still hasn't changed. Again, if anybody has any questions, feel free to ask in the chat. All right, we're just kind of hanging up here on these interim highs. We're looking at the 96 as our next level of resistance. Again, we gave out those levels early on this morning. VIX is trading at 16 handle. You can see here how the VIX definitely goes down when the markets rally. The VIX is the volatility index. So as scalpers or as traders, I think a good uh, index number would probably be around high teens, low 20s maybe. That gives us good ebbs and flows opportunity. Um, Again, when markets rally, they seem to suck the volatility out of these markets. I don't know why, but traders do like markets when they go down better than when they go up. All right, the market here again on these interim highs. A little bit bullish here on the market, you know, just because we are sneaking up here a touch. Again, I thought we can get above 90 there and make a run up. They brought it back down to 88 and change there, or 86 and change, and then popped it back up here. Not surprising. We're looking at the um, 96 area as our next level of resistance. All right, we're just kind of hanging here. Again, a little bit bullish here. We got above 90. We're trying to hold here above 90, looking for a push up to the 96 area. Of course, they did rotate down to back to the 85 and change, 86 and change there. Now we're pushing back up. Looking at the 96 is our next level of resistance. Yeah, coming up here to 96 area. Yeah, coming up here to the 96 area now. Okay, and again, we were a little bit bullish down the market once it got above 90, but of course it rotated back down to 86 and change, and then now making this move up here. Okay, working this 96 area here a bit. See what we want to do. If you did happen to stay long, this is a good exit strategy right here. And then right up here to the 96 area. We don't have any other numbers coming out. Next support level on the downside would be around 74, 75 area. Okay, again, now we're coming up here to 96. See what it wants to do up here. Again, whatever you do, you're going to keep your stop in place. Very important to do that. I'm not going to love any trade we put on. Like I said earlier, rally markets are just tougher to trade. Literally, they just seem to go one way and kind of just like to just kind of do that. This is what's going on here. All right, so we kind of got through the 96 very easily there. Just hung there for a little bit, but then really make any kind of rotation. And now we continue to go up here, coming up here to the even area. And that's why we have our stops in place. As you hit these stops here, and the market kind of does what it does. And now we're looking up here at the 07. And we had a nice little trade there against the 87, but this 96 kind of ran through a little bit, but that's all right. We had our stops in place. We were trying to keep you long here above the 90, and they dipped down below it for a second and then did come back up and then pushed up here to these our next these highs here. So 90 level did kind of work, except it did rotate down a little bit and then rotate back up through it. Next level of area that we're going to be focused in on is up at the 07. Let me give you some more levels here above this 22 area.
you say 22 above?
I'm sorry. Yeah. Well, yeah, I got 14.
Yeah.
Then 22. Then I have 37, 46, and 54. 22, 37, 46, 54. Yeah, I would do that, Mike. All right, we're pushing up here against our highs. Up at 07 is our next area that we're going to be focused in on. And we were trying to keep you along here once we got above the 90. And again, that was kind of dipped down lower before it rotated through. And then now we kind of ran through the 96 area, and now we're coming back up here. Next level that we're focusing on is up here at 07. Our green band coming there at like 9 area there, and our hourly and green band just a 200 moving day average. It's something that we like to use. So we gave you additional levels, and if you look at the chat, you'll see the additional levels we gave out. We have, yeah, 07, 14, right? And then 22, 37, 46, and then
54.
54, right?
Okay.
Correct.
I don't know why it's 17 at that where 14 should have been.
Yeah, I don't know. It is what it is. What can I tell you? I don't know why it kind of ran through even too, like it's no big deal. Usually it stopped there at even, but it's holding here above it. But the 90 there, above the 90 was a little bit of a buy. Of course, it downticked first, then came through. All right. Good here. Just hanging here up here at 02. Now we're getting these like rally markets, like I said earlier, are very difficult to trade. You don't get the rotations we're looking for when you get these rally markets. So we have to take that into consideration when you're trading. We do have the levels, and obviously, we ran through the 96, but that's why we keep our stops in place so we don't get run over. And then look for the next opportunity. Right now, low support would be around the 84, 85 area. All right, the market rotating down here a little support down at the 84, 85 area. I don't know if we're going to get there or not, and I don't know if it's going to hold, but that's where, at this moment in time, it's where we have a little bit of support. And on the upside, we're looking up at the '07 area. All right, we're dripping down here a little bit, a little support, like I said, around the 4 to 85 area. All right, we're just kind of hanging up here in these little highs that they're creating, kind of flagging up here a little bit. And welcome again to some of the new folks that are here. We're trading mini S&Ps. We're looking for opportunities to scalp the market based on levels we gave out earlier this morning, in addition to any price action trades. Market's just kind of hanging here on these highs here. We had a little bit of a buy there above the 90. The question is how you went and how you got along there, and then it made a push up here to these levels, and now we're just kind of hanging up here. Our next level that we're focused in on is up at the '07 area. Like I said, our green band's coming up there at the around 9, so take that in consideration. All right, again, we're just kind of hanging up here at these highs. Looks like the market's a little bit bullish here, obviously. Again, we had a little bit of a buy there above the 90, and now we're just kind of hanging up here. And looking at like a flagging formation up here, and let's see if we can go a little bit higher. We gave you levels above here. We also focus on the morning hours to give us our opportunities to trade. We feel the dynamics work better for us in the morning for what we're trying to do. Again, a little support down at 84, 85 area. We have to be a little bit patient here, let the market kind of do its thing, and then react to an opportunity when the market presents itself. Obviously, markets have slowed down here a little bit. They've taken some of the volatility out of the market. And now we're just kind of hanging up here on these highs. Like I said, we're kind of flagging here a little bit. Looks like it wants to continue to rally, but a little support would be around the 84, 85 area. If you're very aggressive, maybe you're buying it up here in this level, but looking for a better support down to 85, 84. All right, we did say we have a little support there around 95 area there, trying to uptick here a touch. Again, that was a little bit the bottom of that range, but it's flagging up there, so there's a couple reasons maybe you wanted to, jump in if you felt the need to get along down there. Again, we need to have reasons to get along. We have to let the market kind of develop those opportunities for us. And that we did go down there. We did say there was a little support there. If you were a little aggressive, you want to get along, that was it. The better support was down at the 84, 85 area. All right, again, market uptick in here. Again, we had a little bit of a buy there around the 95 area. Those here were a little aggressive. And then we're getting a nice move back up here. Again, you're trying to take some profits along the way if you're trying to stay long. And our upside resistance, next upside resistance up at the 5107 area. All right, we're just kind of hanging up here at these interim highs. Our next level of resistance on the upside is up at the 07 area. Had a little bit of a buy there at 95 if you're a little aggressive, and now we just continue to push back up here. I mean, if you did get long, you're taking some profits. All right, again, we continue to uptick here, trying to keep it a little long from that 95 for a push higher. Trying to get up here to that 07 area. Obviously, if you're taking some profits along the way here, I'm not just going to just leave it well alone here. And that way we can lock in some profits and be happy with it because we don't know if we're going to get up to the 07 area or not. All right, now we continue to uptick here. We're looking at the '07 area here as either a target and or a little shorting opportunity, depending on what you have on or not. Okay, we got up here to 5.5 here. So if you had this 6 area against the '07, comes a little bit more tenuous. Again, I scale in around that level, so I have 6, 7, and then 8. Because we got up here to 5.5 and rotated it off, my 6 becomes a little bit more riskier, a lot riskier. I would probably just keep the 7 and the 8 up on top as my scale around the 7. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions as we come here to the end of our morning session. Again, we like to focus on the morning session to give us those opportunities. The levels, we gave out extra levels. Again, above, we have '07, and then above that we have 14, 22, 37, 46, and 54. Again, we don't know where markets are going. We can use the levels all day long, though. The price action trades do become a little bit more tenuous as the volatility and the volume changes as the day goes on. So the dynamics do change for a price action trade. You definitely have to find the ones that work for you and trade those if you're going to be trading all day. But we feel the morning hours gives us a good bang for our money versus staying here all day and trying to see what can happen. Very tough to sit here all day in front of the screen. And besides that, we're trying to minimize our expended costs, which means not giving the brokerage houses commission so much. So minimizing numbers trades keeps that low, keeps our cost of doing business low, and also keeps us out of trouble. And again, we average, I think we can safely say we average about 4 to 5 trades a day, and I think we can easily get to that to those numbers on an average basis. Sometimes we trade more, sometimes we trade less. It just happens to be to the average, and that's understandable. It's a good number. We're pushing up here to these interim highs. We're looking at the '07 area again. I suggested to be a little bit careful there around '06 for the reasons I said. If you're going in there at 6, right, we're just kind of hanging here. Again, be careful there at '06 if you had an entry point at '06. If you're more risk averse, the '07 is a little bit riskier even now, especially because we're rotating off here a little bit. A little support there at 85, 86. We had a little bit of a buy there at 95 a little bit ago here, looking for a push up to that '07, but we didn't get it. Now we're just rotating back down here a little bit. So unfortunately, depending on how much risk you want to take, the '07 would have been nice if we got up there. We just missed it there a little bit, so it's a little bit trickier now, depending on your risk tolerance. Maybe you lessen the number of contacts you trade up there, like contracts you trade up there against that level, or if you're more risk averse, you don't take the level at all and look for the next level above, which is 14. Okay, you have different options there for different levels of risk takers. Obviously, not everybody here trades the same way. So consequently, you have to understand your risk tolerance and trade it accordingly. Anything that I say or talk about, we do talk about it in our education course. If any of this stuff interests you, let us know. And we definitely could work with each individual here. The goal of the courses here are to be able to find levels on your own, find trades on your own, understand why they would work, and then explain the risk behind them. More importantly, we're always trying to find those the areas that make sense and have reasons to trade versus just trading for because you see the market going up or going down, and you have to jump in. So those are not good reasons to trade. All right, we'll get back here in a bit.
Hey, a couple of quick shout outs and programming notes. We're at the end of our morning session here. We roll from based on the active concepts of entries, exits, and stops based on this group coaching session, having laid out the levels for the day. Today we had a pivot of 50-69, 50-69. We had a nice layout of levels into resistance, and you can see how the market was behaving. We had 50-77, 87, 96, 07, 14, 22, 37, 46, and 54. Below we had 59, 50, 39, 31, and 24. We set those levels, or your trade alone coach sets those levels at about 925-ish coming into the cash open. Those become the frame of the day. The areas of interest that Saul is looking for the market to make change, and he can capitalize on that change based on his technique, which is a price action trading technique. Entries, exits, and stops in and around those levels, whether it's a fade trade, short trade, or momentum long trade. We work the market for those hours, 2.5 hours during the morning session, 2, 3, 4, 5 trades. We're looking to pick up 2 points plus based on our trades, based on the concepts of price action trading in this educational only programming. This is not trading or investment advice. This is an opportunity for individuals to learn the art of trading as an entrepreneur in your or on your own trading platform, whether you're looking to earn a funded trading account, which we have links for, or if you're looking to set yourself up as a new trader, and we have links for you to be able to set up your own trading account, be able to fund your own trading account, be able to practice trade based on your trading platform. In this case, you'd be learning the art of price action trading from a 25-year veteran trader of the trading pits in Chicago, which Saul is. Take a moment for those that are joining us out in your socials. Let's take a quick pause here. Please like us, heart us, share us, repost us based on the socials that you're connecting to us on. Help us get the word out based on this opportunity for individuals out there that are looking to be an entrepreneur and learn the art of trading. We run a multifaceted opportunity for you. The first one is this trade action coaching session. We open up at 8:30, we go to 11 a.m. We get rolling pretty close to the cash open in New York. We set our levels. We set our pivot at the 50-69. We set the levels above and below. We plot those levels into our software based on us teaching you how to do that. We work those levels based on the action of price as those levels get involved during the price action movement in the S&P 500 E-mini. For those that are not familiar with the S&P 500 E-mini, it is a derivative price, a futures index, derivative of a calculated price based on the S&P 500 E-mini. If it's confusing to you at all, look it up on Google and read about it so you can understand what you're doing and what you're looking at and what the opportunity is. The concepts of trading, the risks associated with trading should be top of mind. Trading is fraught with risk, and it has its upside and reward side, which we're looking for. We're looking to develop consistent profitability, helping you develop consistent profitability based on the action of price and your ability to manage your trades based on a price action trading methodology. D-Ron, we work everything in this arena. So it's DayTradingMarkets.org. DayTradingMarkets.org. That is the drop-in right into the service. We do everything in this service. We have links to our affiliates that can help you get set up with a trading platform. We've got links to our affiliates that help you look to earn a funded trading account. That's where it all starts. You set yourself up with that account, get yourself set up to trade. You set it to simulation only. Then we teach you, work with you, mentor you, adjust and tweak you based on your ability to do this. It is a contact sport. It's an individual participant contact sport, and you are the individual participant. We are your coach, your mentor. We help you manage, help you from a point of view of your simulation account to help you develop a skill set, hone that skill set. And then when you're ready to go out in real time, we help you, if asked, for the help during the transition. And it's all done based on our educational services and the opportunities that surround our educational services. We have one-on-one coaching for individuals. If you want to join us directly in Zoom, which should be your next step based on coming out of your socials, join us by registering for our Zoom daily webinar, our trade action coaching session, and monitor it, get comfortable, and decide if you want to participate. Get yourself set up with a trading platform. If you have one already, come in, pop up a S&P 500 E-mini chart. If you don't have one, we can help you get set up with it. And then start taking the steps. DayTradingMarkets.org. DayTradingMarkets.org is the URL to drop right in. And then we have a dialogue between us and you to find out how we can best help you from where you are on the learning curve, how to help you get set up to move forward with a trading platform, your charts and your order entry, help you as a experienced trader that has that already and really wants to buckle down into the art of consistent profitability. We help you focus and change your approach, help you minimize what you're looking at on a daily basis, and help focus you on price action trading. We try to reduce we suggest that you reduce the output that's in your face from your trading charts and really focus where the rubber meets the road at the price action level of trade. And look, develop, and hone your skill set as a trader by focusing on doing one instrument, the S&P 500 E-mini, and doing it well. We generally have a 2-point stop. Our entries, exits, and stops in and around a pre-mapped out level is done based on a price action methodology that can be taught by us, learned by you, practiced by you, and we do it every day, every trading day. And then we have one-on-one coaching lessons that are based on your schedule and Sol's schedule, and we help you get set up for that also. Christina, let us know how we can help you. D-Ron, Philip, how are you doing today? How'd you make out? Let us know back in chat. Hey, Duran, you got it. And you got the message about, we do everything here, either personally on the telephone, in which we could set up a private trading consultation with you, whether you're a new trader or experienced trader. We can work with you on helping you get better at what you're doing. If you're looking to earn a funded trading account, we can help you. This is for everybody out there. And if you want to get set up based on the starting point as a new trader, and when I got set up with a platform, you can choose which way to go. And then it's a matter of being part of this group coaching session. And then if you want to spin off into a one-on-one opportunity coaching lesson, then that's something that's available to you as a developing trader. Just let us know where you are on that curve. Christina, Duran, Philip, let me know if you're a regular Philip or you're a Philip that needs attention. Don't want to ignore you. Usually our regular Philip is here for the trading session. Sometimes he leaves a little early, but he's usually not here this late. So just let me know so that I can help you as it relates to your interest. Everybody comes to this as an individual contributor and an individual based on their wants and needs, your wants and needs, and how you prefer to be doing this, which I think is key for you. I wanted to thank those that have taken a moment, and if you haven't yet, please do it now, in liking us, friending us based on our distribution through social media. Repost us, DayTradingMarkets.org, DayTradingMarkets.org. Heart us. Find us in social media, based on our outreach. Go in and, repost us around, heart us around, like us around. We appreciate that. Follow us based on the medium that you're in. It really does help us get the word out based on this opportunity for individuals. We get a nice group of traders in here on a daily basis, and we appreciate you joining us. And the outreach to the socials. And, if there are any trading rooms, trading groups, trading websites, trading forums that you're part of, please get the word out on Saul. Saul is a 25-year veteran trader of the trading pits in Chicago. He's actively scalping for his own trading account. He is available to help teach and mentor traders. One of the keys about Saul is that you'll find him in here during the morning session, working the market for his own trading account. He is at risk. He puts, you could say he puts his money where his mouth is when it comes to not only his price action trading and his price action trading method, but he also sets these key levels right around the cash open as a trading advantage for himself. And you can look to use it as a opportunity as you review, post, plot the same levels. So when you get a pivot of 50.69 in the morning tucked up against the cash open, Saul's giving you his level. When you receive resistance levels at 77, 87, 96, 06, and 07, and so on, those are levels that Saul's looking at as opportunity points in his own trading to trade. Now you're getting those levels. You can see the action of price and how, as the market comes into those levels, the market behaves. And you can start to pick up how Saul does. In other words, if he's predicting action of price in and around these pre-mapped out levels, and it turns out that there is no action of price, on a, based on trade action movement, then you might think that Saul doesn't know what he's doing. The feedback that we get from individual traders out there is that Sol's levels, the ones that he produces for himself and he gives out, based on his coaching session, are levels that are superb levels as compared to levels that you get spoon-fed by your software. Let's talk about that for a second. Let's say you are using software. You're using a software package. You have set yourself up. You have delved into your software package and you have set up indicators, time frames, crosses. You're receiving levels based on whatever instrument that you are looking at. And let's say the instrument in this case is the S&P 500 E-mini. I think you might notice pretty quickly that Sol's levels may be better than those levels and a better opportunity to trade around than the levels that are spoon-fed to you by a software program. Well, let's take it one step further. If you visualize how many individuals out there are trying to make a buck off trading, now we're trying to pick up, 200, 300 bucks a day with one contract in the S&P 500 E-mini, either from the long side, going long or going short. We're looking to do 2, 3, 4, 5 trades. We're going to pick up 2 points plus on each trade. We're defending at 2 points. But having said that, the opening bell is at 9:30 Eastern time. Before that opening bell, there's an awful lot of individuals out there that are utilizing standardized software as their information source of choice. They have set up and mentalized to create all sorts of stuff on their charts. They have put up indicators. They have crosses, time frames, all the stuff on their screens. And they are in the starting gate coming into the 9:30 bell, all looking to capitalize off the information that's coming through their standardized software. Now, in my opinion, that's a real hard place to be, because if you've got a group of people, let's just say it's 25 people, 2 people, 5 people, 10 people, I don't know what the number of it is of individuals out there that are focusing on trading, coming into the opening bell to make money for themselves. But I think it's a pretty large group of people, but I don't know the exact amount. But you can imagine that there's a lot of people crammed up in that starting gate. They all have got their standardized software. They're all being triggered based on the action of whatever moving after the bell goes off. In this case, the cash market for the overall market. You're loaded up and you've got your software ticking off stuff, and it's stuff that has already happened, right? What does charts give you? What indicators give you? Everything, in my opinion, it's delayed. It is giving you what just happened and plotting it based on the variances of what somebody creates based on a platform. In my opinion, that causes a mosh pit. In my opinion, everything goes out the window, because the rush of money, the rush of trading, the rush of the action causes confusion, stops people out of their trades based on the volatility, and people get spun up into it. And there's some people that can make money off that. I think it's a small percentage of people that can survive that. And then there's a lot of people out there that get run over. What's the viva la différence for what Sol does? How does he set the table for his own trading day so he is least likely to get caught up in the mosh pit? Is because he sets his own levels based on how he sets his levels, which is teachable by him and learnable by you based on this service. Price action trading is teachable and learnable. How to set Sol's levels is teachable and learnable by you. Then it's up to you to apply it, ask questions, interact, be mentored, adjust and tweaked based on the action of price, how to apply price action trading, how to set these levels, how to know when a level's valid or not valid. Sol calls them levels and zones for a reason, because you have to be nimble, adjust based on price change, and he teaches you how to do that. He supports you in how to do that. He helps adjust and tweak you on how to do that from a educational point of view. That is a huge difference between joining the masses and getting spun up and spit out. This is a disciplined approach to trading. It is the difference between being a trader and a schooled professional trader. It's the difference between being an outright gambler and a professional gambler. And that's the opportunity that's afforded to you based on the services. In addition, Saul's a 25-year veteran trader of the trading pits, trading the markets at risk based on his price action trading methodology and at risk based on his pre-mapped out levels. And one could say that if Saul's levels are any good, then you have a leg up based on the action of price in and around those levels, right? But appreciating the concepts of momentum follow through price change as it relates to those levels is something that is learned and taught over time as you are learning to apply your skills, as you're applying your skills, and as you develop experience based on the development of those skills. So that's what this service is built for. It is built for individuals out there that want to be an entrepreneur, have started out to be an entrepreneur, but just aren't getting it done. And they want to get into a scenario where they have a direct relationship with an individual that's going to help them bridge the gap into the concepts of consistent profitability. Now, that's a tall order. Don't take that, as a, you got to earn your stripes as an individual contributor in your trading business. You've got to earn your stripes on a daily basis by participation, by asking your trading coach, by interacting. One of the keys is that when Saul is involved in the morning session in trading in and around these levels, he's going to have an answer for you that's a little bit like, think about that. Saul is going into an area, a particular level. You're going in quite possibly to an area in a particular level. And when you ask him, hey, Saul, I did this, there, that, and he may have had the same experience as you. He may have done it the same way that you did it because you were taught. You may have done it a little bit off and he can correct you. Plus, he also has the emotional component of being involved based on today's price movement, the action of price, how the levels are behaving, the entries, exits, and stops, the whys, and he can impart that to you so that you can pick it up for yourself. And you can now tweak and adjust yourself based on the reality of the trade. Instead of being, schooled after hours to try to figure it out for yourself, asking a question to somebody that doesn't know what you were into at the time. I think that's all important for you, to be able to do that. And I think it's really important for you to be able to experience in a simulated environment until you get good enough to take that out at risk real time with one contract. Let's say you are learning this poem and you get good at it, and then you roll out into one contract at risk. Well, work that transition with your trade along coach. Work that transition with Saul so that you can work that transition to your best benefit and be able to get answers based on the new reality of at-risk trading. You spent the time learning, you spent the time getting good, you simulated trade until you're really confident in what you're doing. Then you move out into real-time trading, and you still want to have an individual in your corner like Saul to help you make that transition. mean, that's the offering. You know, a lot of times, you may know this, you may not know this, that there's a lot of spaces that people hang out in. And in my opinion, those spaces are filled with individuals that are all talking up their talk. And it gets very distracting. It becomes very unproductive. Or it could become, in my opinion, an area where you can get lost and start to lose money and get spun up into other people's thoughts. And the thoughts are so many from the group that you start to listen and deal with people that sound good. They may or may not be trading, and they spin you up into some sort of confidence in them. And you realize that, I don't know if you just got scammed, but you're certainly listening to a lot of people that are in these arenas. And I call it, might be harsh, but I call it trader daycare, where there's a lot of individuals that are just looking to hang out, and they are, involved in the market somehow, or they claim to be involved in the market somehow. They're putting trades on and taking them off. They're high-fiving themselves. Other people are high-fiving them. And it all looks really good, for groupthink. But, what's the viva la difference based on dealing with a individual that is at risk trading, has set the table for the day based on coaching levels, helping you navigate the concepts of price action trading so you can get good at it. And when you're asking a question and interacting, you're interacting with one individual that is giving you the attention that you need without all the bluster, fanfare, and quite frankly, trading daycare. So this is your opportunity to go to school, with a 25-year veteran trader to help you develop your skill set, learn the poem, apply it, be adjusted and tweaked based on that. And again, what's the frame? The frame is how do you come in, set yourself up, and bank money for the day? And based on your entries, exits, and stops, and I think it's important to talk about that for a second. There are generally a 2-point stop placement based on solid price action trading methodology, and they'll expand that based on the action of price after the cash open in New York. Now, when you start to have a stop, you also have things called price action trading entries and exits. Like, the reason you get into a trade is because you're confident that the trade is going to go in your direction, right? End up in the direction that you want, and you're looking to pull down 2 points plus. So let's say it's a couple $100, right, on a trade. Now, you have the shot at doing multiple trades if you're good, right? But the idea is if you can pick up a couple $100 a day based on a skill set that you developed, and you can raise your contract size, you still only need to do the one trade well, and now you're picking up, $400 or $500 if you know how to manage that trade. And that's, $200 or $300 is a great day. The idea of doing, $400 or $500 is a great day. I think there's a lot of exaggeration going on out there where people are trading and saying and claiming they're making $1,000 on that trade, $4,000 on this trade. Oh, I did this yesterday, whatever, and I don't buy it, and I've never bought it. And if you smoke those people out, you quickly figure out that, in my opinion, that they're not doing that, and you shouldn't pay attention to them, and you should run from them. Having said that, there's an exception to every rule. But my point is that, a stop doesn't have to be your pain point. When you get into a trade and you're schooled at the art of price action trading, you're going to have an innate sense that your trade is working or not working based on how you came into that trade, in and around a particular level, whether it's support and resistance, and you are setting yourself up into that trade to make a profit, or else you wouldn't get into the trade. Now you have a stop placement as the ultimate out, right? And that, let's say you have a 2-point stop, that's 2 points against you. You don't have to suffer your stop because you have entries and exits. Either you're entering into a trade at a price, then you're either exiting into your profit area, and we're looking for a 2-point plus minimum profit to get into a trade based on our skill set. But let's say the market fundamentally changes based on your innate experience, and you get out picking up a 0.5 point, or you get out picking out a point, or you're down a 0.5 point. And because there was a fundamental change based on your experience, you get right out of the trade, however you end up. You could be up a little bit, you could be down a little bit, but you're certainly not getting stopped out in that trade because you're better than that based on your developing ability. So a stop isn't always, it is a protection for you, but your entries, exits, and stops are done for a reason based on momentum and follow through. And you can pick up pretty quickly when the trade is going sideways, and then you just get out. Now, I would preface my comment to that's one contract at a time. When you start doing multiple contracts, you can certainly have a little bit of a retracement into your stop area. But as you have the momentum play, you can cover one of your contracts into the positive and then adjust your stop where appropriate to let the other contract go. So let's say you were doing 6 contracts and you worked that with 3 contracts at a time. There is a ability based on your expertise to be able to manage a trade and milk it for whatever the movement is that you expected or the movement that you have locked in, and then allow the movement. And you're taking on risk, right? Because it could retrace enough based on that one contract. But if you're adjusting your stop, you're really locking in, the opportunity. But that comes with experience, and it comes with working it. The idea of simulated trading, is not an unknown concept. The concept of simulated trading, working a price action trading methodology and working key levels, the coaching levels, or working around the coaching levels, is an advantage to you from a simulated trading perspective because you're working it like a pro. You're working it because you can, and you're working it like a pro. Just give me 1 second. And so while we take a little bit of a pause here, like us, share us, take a moment. Okay. Like us, share us, heart us, repost us, find us in your socials, friend us, follow us. Take a moment in time to do that. So we're going to be stepping out into, out of this part of our programming. Sal's going to be running a class in a private Zoom classroom with one of his students. So I'm going to close this down. I encourage you to register for our Zoom room. Register for our Zoom room. It's DayTradingMarkets.org. DayTradingMarkets.org. Again, in your socials, like us, share us, promote us if you can. Whatever you do based on your outreach, it's very helpful for us. I talked to somebody the other day and said, hey, you got to ask. People are very good when you ask. They may not know that you're interested in that, so you have to express it, which I am doing now to you. And we appreciate you. We thank you. We invite you into our Zoom room. We ask you to register. for our home base, our Zoom. It's a free access pass to you. Come in, kick the tires, ask questions. If you need a private consultation, let us know. We can help you get set up with our links to get set up with your trading platform. Through our links, we can help you get set up to look to earn a funded trading account. And we'd explain all that to you based on you coming in. So I'm going to be winding this down. I appreciate it. It's 12:16. Everything we do is for educational purposes only. Nothing to take as direct trading or investment advice. And again, kick us up on your socials and appreciate it. DayTradingMarkets.org.